Hi, everyone. Welcome back to Foreign Currencies with Scott. Today is Sunday, January 11th. The first thing we're going to do today is we're going to look at some charts that show us the two potential trading days for the end of last week, Thursday and Friday, and see how we did there. And then we're going to come back with you here and talk a little bit more. All right, let's get to it. All right, we're going to take a look at Thursday night New York close going into Friday. We hadn't said anything yet, but Thursday there was no trade available. So we simply went on with the rest of our day and decided to see if anything would happen on Friday. So at the Thursday evening close of New York, you can see at the left in the middle, the price was 134 and 38.6 pips. And then we have our two 30 pips away lines. Now, this is Sunday afternoon that we're doing this recording, so that horizontal line below the 134.8085 is the current price, so just go ahead and ignore that. Just focus on the middle line and the two lines on either side of it. So you can see that after the close of New York on Friday, we hovered around the New York close line for a bit, then went below and then finally made a pretty good move below here just before 3 a.m. But you can see that at 3 a.m., which we've positioned in the center now, we were not close to being 30 pips below. So we waited on this one. We waited to form a bit of a low. And you can see here that, and we'll just zoom in on the time here. You can see that between 5 and 6, we were certainly below. Now, we want to be below 30 pips away when we enter this trade. Otherwise, if we're just looking to get back to New York close, it won't be as far away as 30. And we want to win with 30. So what we're looking for here is a position that starts under the 30 pips below New York close and then finishes that way as well. And so what we have here is we can see if we just close it up on it, we can see that, let's look at 5 a.m. first. Okay, that's a no-go because we're above the 30 pips below. So finally then later here, we went below and that was at 5:20. And then at 5:25, we did have a candle going in the right direction and it was just barely below that 30 pips below. So we did decide to enter at this period. So now we would have bought and we would have been looking for 30 pips or roughly back up to the New York close. And then a stop loss for us would have been 20 pips, which would be down to 133.885. And I'm getting that from the number on the left here. I'll put it in the center there. That's our 30 pips below price, 134.085. So 20 pips below that would be our stop loss, and that would be 133.885. So as you can see, as the time went on, we did not go below our previous low, much less get to that 20 pips below. And then we kind of took off here between 7 and 8 a.m., finally headed back up to the New York close. And then by 8:30 a.m., we did go through the New York close here and certainly caught our 30 pips and ended the day with a win. However, what I want you to see here is something quite fantastic, which is this period is a green candle with a very long wick below it, perhaps as long as the candle itself and perhaps even longer. If we look at the time, well, I see now I have 9 a.m., so let's get rid of that. Let's go back and focus on this time, which is when we closed out with a win. It was 8:30. You can see that the highest was 42.7 pips and the lowest was 98 on the previous 100.6 pips. So that's about 44 pips in one 5-minute period. So that is a significant move And you can see that the low there went down to, what did we say? It went down to 986. So if you remember, our 20 pip stop loss from our entry was 88. So we were saved by 10 pips. So in this case of a move like this, we were fortunate. We were fortunate because this 5 minute period could have been more than 50 or 60 pips. And even though the pair moved higher in that period and in the subsequent 3 periods, you can see it moved higher. All it had to do was just touch that 20 pips below down at 88, and we would have been stopped out for a loss. And I can tell you that's very, very frustrating when during one 5 minute period you're stopped out, and then within that same 5 minute period, your pair went on to do what you wanted it to do. Those are very frustrating circumstances. So in this case, we did not have to experience that negative emotion. Instead, we were fortunate and the pair did not hit our stop loss and went back up and hit our take profit. So we are very happy about that. And that means that we closed out the full week with 2 trades and 2 wins.
Okay, so I have come to this website before on this channel, babypips.com. It's an excellent website for learning about foreign currency trading and also as a reference guide for foreign currency trading. Now, what I'm going to show you today is I've gone to their economic calendar and we're looking at the economic calendar for Friday, January 9th. Now at 8:30, that is when we had the very large candle with the long wick. So the pair went up and down. I think it was over 40 pips just in that one 5 minute period. And these things that you're seeing at 8:30 all have an impact on the pair through the fundamental traders. So the fundamental traders are the ones that say, oh, if housing starts is really bad, that's going to hurt the dollar and the pair is going to go up. So they're making all these qualitative judgments about which direction the pair is going in based on the news. And there were just a phenomenal number of news items at 8:30. You can also see that some of them have an impact of medium and some have an impact of high. As we go through here, though, I can tell you that there were 7 events at 8:30 that had high impact. So we also see a combination of green and red on those numbers, meaning that some was good news for the dollar and some was bad news for the dollar. So it's not a wonder that the pair moved so much during that 5 minute period as people were disseminating this information.
All right, so I thought we would take another look at our spreadsheet and see where we're at for the month and overall. So I'm looking at the H column here, the January column, and you can see now that on Friday, well, there are no dates here, just numbers of trades, but we had another positive result. So that top number in cell H10 represents our current balance, 2486.48. So here we are, not even halfway into January, and we're getting close to that 2500, which was our original goal for the end of December at 6 months. We're still a ways away from it, and I do expect some kind of pullback here. We're not going to just keep getting positive trades over and over and over again. But right now we have 4 straight positive trades. You can see that by H10 being white, H11, H12, so that's 3 trades. The number below that is 2269.52. That's just where we started the month, carried over from cell G10, which you can see is also white. So that was a win. So that's 4 straight wins, which is a new winning streak for us since July 1. And now if you look down in the February column, usually to the right of the month, I put the running percentages. So The bottom number is 9.6. That's how much we're ahead just for January with those three trades. So we're making over 3% a trade when we go out with a win. And then overall, since July 1, we're at 24.3%, which is getting obviously closer to that 25. But then again, I do expect some sort of pullback coming. We can't just expect win after win after win. If we do look down further in the January column, we'll see that our record is 3-0 there. Overall, since July 1, our record is 18-16.
All right, here we are back again. And we're having a little trouble with the microphone, so we're going back to the phone microphone. So I will try to speak a little louder for this segment to make sure that you can hear me. So I wanted to talk this evening about a couple of different types of YouTube things that we're seeing right now. The first is there are a number of people out there with their channels saying that 2026 is going to be a terrible year and the market's going to crash. Excuse me. Sure, there are some people who are on the other side and saying 2026 is going to be a fantastic year with new highs everywhere. And what I want to say to you is none of that matters to us. None of it at all. Now, just in the charting section earlier today, we were looking at baby pips and we were looking at their economic calendar and how many news items came out on Friday at 8:30 during our 5-minute candle where we closed out for a win. And the point I was making was that that's why the candle was tall and had a long wick, but it really has nothing to do with our trading. And these YouTubers who are talking about the market having a terrible year or the market having a fantastic year, they're all talking about those fundamental reasons why they think that's the case. The news of tariffs or the news of trade deficit or overall deficit of the US economy and what that's going to do with interest rates. That's all fundamental trading, and that is not what we are doing. We are doing technical trading. We are doing trading based on 5-minute candles within a short number of hours during the day. So I want you to relax in the knowledge that none of that has any impact on what we're doing, and you can safely ignore it. No matter what happens, whether the market goes way up or way down, it is not going to change our method or our discipline of how we go about it. Now, sure, will the US dollar, British pound, could it go way up? Sure. Could it go way down? Sure. And that is where the fundamentals will come into play. It'll force the market up or it'll force the market down. But we're looking at a couple of hours each day. And so even though the market is going way up over several days or weeks, each day it's going to go up and down. And we're just looking for those little movements in the technical trading by looking at the charts. So we do not need to worry about the news. So put that thought out of your head. We do not need to worry about the news. Now, the other thing I wanted to talk about that I've seen on YouTube is a guy who's doing ads for his services. And one of the things that he does in this ad is he says the main reason why individual investors have so much trouble over the years making money is because they keep chasing the next best thing. They keep chasing better results or different results, or they start using different methods, or they start metrics, statistics. They look at charts and see different things. They find different people to follow who have different ways of doing things, and they're always chasing. And his advice is just find one thing, stick with it, be disciplined. And to that, here at Foreign Currencies with Scott, we applaud that and we agree with that wholeheartedly. Find that one method and stick with it. And that is what we are doing here. We had a little bit of a shaky time in October and November, but we weathered that well. And then in December, we really got back to discipline in earnest. And so for the past 6 weeks through December and the first half of January here, we are just doing gangbusters following that one method. And we're going to keep doing that and we're going to be successful as a result of doing that. Okay, so it's Sunday evening. I hope you've got your trade lines all set up for the Monday morning London Open. We'll see how that goes, and we'll talk to you again on Wednesday evening after 3 trading days. Okay, until then, good trading, everyone. Bye bye.